Hello, aspirants, and welcome. Today, we are tearing down the latest NITI Aayog Trade Watch report. Our mission? To pull out the most critical, exam-focused insights that are really going to give you an edge. So let's get right into it. All right, let's kick things off with a single number that tells a huge story. 478. That's the World Trade Policy Uncertainty Index from the last quarter. And get this, it doubled. Now, this isn't just some random statistic. Think of it as a huge flashing red light for the global economy. It's signaling some seriously turbulent times ahead. So you'll want to keep this number handy. It's a powerful data point for any answer you write on external sector challenges. And, that global turbulence leads us right to the big question, the one at the heart of this entire report. With all these headwinds, both geopolitical and economic, how is India's trade sector actually holding up? That is exactly what we are about to unpack. So, here's how we're going to tackle this. We'll start with the big picture on India's trade, then get into something really fascinating, what I'm calling the Great Export Paradox. After that, we'll do a deep dive into the leather and footwear industry to see this in action, compare India against the competition, talk about crafting a competitive edge, and then wrap it all up with the key takeaways you need for your exams. Okay, first things first. Section 1. India's trade, the big picture. Let's look at those headline numbers. So, for fiscal year 25, India's total trade was a whopping $1.73 trillion. I mean, that's huge. But the real story, the one you really need to see, is in the details. While we do have a merchandise trade deficit, just look at the performance of our services exports. They hit a record $387.5 billion. That's basically acting as a cushion for our economy and really shows off our strength in the global knowledge space. It's pretty incredible. Now, this brings us to what I think is one of the most important ideas in this entire report. I'm calling it the Great Export Paradox. You're going to want to pay really close attention here, because this is a concept with some serious potential for your mains exams. You see, when you dig into the data, you're forced to ask a really basic but crucial question about our whole export strategy. Are we even selling what the rest of the world is trying to buy? And the answer, well, it reveals this fascinating paradox. This table just lays it all out, crystal clear. Take a look at these numbers. A massive 2/3, that's 66% of the entire global import basket is made up of high-demand products, and our market share in that huge space, a tiny 0.2%. Now flip that. In niche markets, which make up just 3% of global imports, we are a huge player with an 18.2% share. See the mismatch? And this chart really drives the point home. We are basically a big fish in a very, very small pond, but we're just a minnow in this vast ocean of global trade. This structural problem is India's Great Export Paradox. You should absolutely remember that term. It's a fantastic analytical tool when you're discussing our export challenges. Right, so to make this paradox feel a bit more real, the report zooms right in on a case study, the leather and footwear sector. It's a perfect example of both the opportunities and the massive challenges we've just been talking about. So why this sector? Why leather and footwear? It all boils down to this number, 4.4 million. That is how many people this sector employs, and a huge chunk of them are women from some of the weaker sections of society. So right away, you can see this industry is just massive from a socioeconomic standpoint, especially for India's inclusive growth story. But, and here's that paradox popping up again, even though it's a giant employer here at home, India's share of the global export market has been stuck below 2% for almost 20 years. So all that domestic importance just isn't translating into global dominance. Now, to dig into this, we need a key economic concept. This is one you absolutely have to know for your exams. It's called Revealed Comparative Advantage, or RCA. It's actually a pretty simple idea. If a country's share of exports for a product is higher than the world's average share, then its RCA is greater than 1. And that tells you it has a clear comparative advantage. Simple as that. And here's where it gets really interesting. When we apply RCA to India's leather sector, you see these really high scores for things like leather apparel and saddlery. Our advantage is obvious. But you see the problem, right? Look at the global demand. These are all niche, low-demand categories. And just like that, our case study comes full circle, right back to that great export paradox. So, if we have this so-called comparative advantage, why is our global market share so pitifully low? Well, that leads us to the critical issue of competitiveness. And for that, let's see how India stacks up against a key rival, like Vietnam. Wow. I mean, this slide really says it all, doesn't it? It highlights a huge competitive disadvantage. Our manufacturers in India are paying about a 10% tariff on essential raw materials, things like rubber and plastics. Meanwhile, Vietnam, which often gets the exact same stuff from China, pays almost nothing in tariffs. It's like we're starting a race 10 yards behind the starting line. If you look at Vietnam, their success gives us a pretty clear playbook. They've dived deep into global value chains, they've been super smart about using free trade agreements to get better market access, they pivoted hard towards high-demand non-leather footwear, and they've made themselves an essential manufacturing hub for giants like Nike and Adidas. It's a masterclass, really. All right, so with all these challenges staring us in the face, what's the plan? What's the way forward for India? How do we start to craft our own competitive edge? Okay, here's a little something to help you remember the key policy recommendations for your exams. Just think of the word C rafts. C is for modernizing our production clusters. R is for a big push in R&D and branding. A is for getting better market access through FTAs. F is for shifting our focus to non-leather footwear. T is for upgrading technology and skills. And finally, S is for sustainability and compliance. CRAFTS. It's a simple, powerful way to remember the framework for moving forward. Okay, let's pull this all together. We're at our final and maybe most important section. We're going to squeeze everything we've talked about into one powerful slide for your revision. And this slide right here is your ultimate cheat sheet. Seriously, I'd pause and take a screenshot. You've got the key data points, the core concepts like the export paradox and RCA, the critical analysis on tariffs, the big strategic shift we need to make to non-leather, and of course, that C-RAFTS policy framework. It's the whole essence of the report all in one place. And so we'll leave you with this final big picture question. It really gets to the heart of the matter for India's trade policy. As these global value chains keep changing, is it enough for us to just be really good in a few small niche areas? Or is it time for a fundamental overhaul, a total realignment of our entire export strategy so we can finally compete at scale? That right there is the multi-trillion-dollar question for our policymakers. Thanks so much for joining this deep dive today.